Hi, this is Papa with Ndofire Tutoring. We'll be doing partnerships, specifically current accounts and appropriation. And now we've been given a list of balances at the 28th of February 2015. Now we need to quickly go down. These are the list of balances. As we go down, we'll be looking at B and C to prepare the appropriation account and the current accounts. So let's go and look at the list of balances. Now for the current account, we clearly must record the balances, and in the list of balances we have been given a current account on the 1st of March 2014, and with that we can start recording. So for the list of balances, before we go further, I need to check whether they are credit or debit balance. Now it says debit balance, and let's look at the amounts: 500 and 600 respectively. So T-Toy 500 and then P-Porky 600. Now we'll go down and record that information. Now we are going to start off by inserting the date. So let's do that. For the date, we have the 1st of March 20.14. So we have a balance right there, like we read, it's 500, right, and 600 respectively. So the balance brought down from the list of balances is 500 for the gentleman T-Toy. And we'll quickly go down. Since they were both debit balances, we must put them as such. So 1st March 20.14, we have again balance. So for this balance we have 600 as we read above. So after doing this, the next step is to look at your drawings. Now before you look at drawings, let's check if there's any adjustments that affect drawings. So as we look at adjustments that affect drawings, additional information: T-Toy and P-Porky share profits and losses at 2-1. Now on the 28th of February 2015, salaries for services rendered according to the partnership agreements were paid, right? So they were withdrawn to the partners as follows: T-Toy 6,000, P-Porky 4,000. So this is very critical information. It means that we are gonna then go back and check on our list of balances if we do have any drawings, and we do indeed have drawings. So we have drawings for 3,880 as well as 1,800. Now clearly these drawings do not include the 6,000 and the 4,000 which we just read on the additional information. Therefore we are going to quickly add these amounts to the balances. So the balance is 3,880. So let's go and make the necessary adjustments. So the necessary adjustments that need to be made in this regard for drawings, for drawings, right? Drawings regarding T-Toy drawings, let's put that 3,880 plus, as we read, 6,000, right? 6,000. That comes out to be 9,880. That's fine. Now, interestingly, the information that we were provided was for salaries. We therefore are gonna then put in salaries as well, because we already know how much they got for the year, which is 6,000 for T-Toy. And let's go back to our information again. So partners were paid 6,000 and 4,000 respectively. Let's go back and check the balance for people key for drawings. For people keys 1,800. So 1,800 plus 4,000, that makes it 5,800, right? So let's carry right along and go and record that transaction. For this transaction, we are gonna record, as we have read, under drawings. So we have drawings right here. We had 1,800 according to the list of balance plus 4,000. So we therefore have 5,800. After having done this, we need to also realize that we had salary, which was paid for the year of 4,000. For you to get a salary of 4,000 means that it's a small, very, very small partnership. After having done this, we are quickly now going to look at other transactions that affect the current account and the appropriation account. So once we have done this though, what we can do is we can make a double entry adjustment. But before we do that, let's go back and check our both these amounts were recorded as administrative expenses, so they must be deducted from administrative expenses. Let's check what is this. Administrative expenses 33,750 according to the list of balances. It's the fourth item from the top, and that affects the income statement. So let's not dwell into it because we're not doing the income statement now. Let's carry on and check what other amount is needed in the current accounts and appropriation. Now I know interest on capital is also needed. So let's look at on the 1st of March they had 40,000. So T-Toy had 40,000. P Porky had 20,000. Okay, so we know the balances as at the 1st of March, the beginning of the year. Now what we are going to do is go and read some of those additional information or adjustments. Interest on partners' capital accounts amounted to 2,140 for T-Toy and 1,070 for P-Porky. So when you look at this, you ask yourself, is this the actual amount that you're going to be recording, or you need to calculate the interest? According to what is given, is the information is complete, and then we are going to record this directly into the current accounts and the appropriation account. So let's carry right along. So before we carry along, let's just recheck the amounts. So the amounts are 2,140 and 1,070. So let's carry on and record. So again, interest is going to be recorded where? On the credit side of. So we have 1,070. So I can simply, okay, let me go back just once before we start recording under the appropriation account. Let's just finish up with all the amounts that we can record on the current account. So right now I am going to insert those amounts. It's 2,140 for this gentleman here, T Toy. So it's your interest on capital. So your interest on cap will be 2,140, as well as your interest on capital for Pipoki is given as well as 1,070, if my memory serves me correctly. So we have most of the amounts that we need for the current accounts. Now, what we need to do now is to ensure that both sides are balanced, right? Now, before you balance these accounts, you must note that there is an amount that will come from the appropriation account. And now we need to go directly to the appropriation account and record the information that is in the current account. So there will be contra accounts, certain amounts in the current account needs to be recorded also in the appropriation account. So let's go right ahead and check. Okay, for the appropriation account, the first amounts we can record is that interest on capital, right? So let's start off right there with the interest on capital, because it's the freshest one in our minds. So interest on capital, let's go up and say interest. Okay, interest on this pen sometimes, interest on cap, and then we have let's say 2,100 plus, okay, 2,140, and then we also have 1,070, which is also the interest on cap. For this one is T. Let me just put it in that circle, the T. So the interest on cap for P is 1,007. So now we'll look at also another amount that goes in is the salary. So the salary for T Toy is 6,000, if my memory serves me well. So it's, and it will be for P will be 4,000. Okay, so we have the amounts, right? So those are the amounts. So normally in the appropriation account, you balance this out with what you call the profit. So I'm cheating here because I've already done the income statement. So the profit or loss, let's just say, or loss, profit or loss. Now in this case it's a profit. The profit or loss is 22,480, because I've already done the income statement, and you need to do the income statement for you to be able to have this amount, right? So now that we have this amount, just note that you need to then put your balance, your total amount, so that you can actually calculate certain amounts, which are your current accounts for T-Toy, which will go, is the current account, is the appropriate, will go to your current accounts as appropriation accounts. So whatever remains for this 22,480, let's just put it down, 2,480. Okay, sorry about this. I need to provide more room in the future, but for now we will use that as is. So we have totals of 2,480 on both sides. Now this must deduct these amounts, and you will then have your current account. So the money that goes to the current account for let's say T as well as for P, right? P Porky and T Toy. So the difference between these amounts is very critical. Now, what is 22,480 minus 2,140, 1,070, as well as 10,000? So that's what you need to calculate and come up with a figure. So the figure for this, like I said, I'm cheating because I've already done my income statement and statement of changes in equity. So this is what you need to do initially for you to be able to get the amount, which is now the amount is 9,270. And you should also remember the profit sharing ratio is still 2:1. So how you calculate is you will then have your, let me just put it down here. So the balance is 9,270 multiplied by 2/3, and then you get your amounts as well as 9,270 times 1/3. So this is the ratio that you use. So for the first, you are gonna get 6,180 if you use your calculator. For the second, you'll get 3,090. So these are the amounts you need to record where as your current account in the appropriation account. So let's start off with the first amount, which is 6,180, and the second amount is 3,090 sharp. So these amounts are gonna be recorded where in our, so let's just quickly go back to verify the amounts. So it's 6,180 as well as 3,090. So once you have these amounts, you can start recording. So let's go back and do our double entry. So from that point, you will then have to put these amounts down in the current accounts as what? As appropriation accounts. So they share in both profits and profits as well as losses. So fortunately this time around they have a profit, right? So if it's a profit double entry, it's then gonna be on this side of the account, which is gonna be written as appropriation account because it's from the appropriation account. Appropriation, I know my handwriting is terrible. I blame it on the pen, but so the amount, the figure that you need to put down, it's 6,000 and what? 6,100 and we starting off with 6,180 for our gentleman T Toy, 6,180, and for this P Porky, for Porky, our piggy, for Porky we have appropriation account, appropriation. Okay, appropriation account, it was 3090, right? Again, forgive my handwriting. I'm sure it will improve in time, but for now, please bear with me. Now, 3090. After having done this, you will then look at the bigger side. Which is the bigger side? And we clearly have a bigger side being this side. So if you add 4,000 and 3,090, you get 7,090. Then you add this 1,070, you will get your 8,160. So you have your 8,160. We are on people key, and we must also have the same total right there, which is 8,160. And now we'll want the difference. So 8,160 minus 600 and 5,800, that's where you get your balance carried down. So for this balance carried down, balance carried down, so for the balance carried down, you have 1,760. And this balance should be brought down, so you'll have your balance brought down. So next, when the year starts, they will have a credit balance of how much? 1,760. Again, excuse my handwriting. So let's carry right along and also look at the top side. Again, it seems like the top side is bigger than the credit side is bigger than the debit side. So let's look at the total. If we add 2,140, 6,000 as well as 6,180, we should get an amount that will then have to give us, it's over, the amount will clearly be over. So 6,000 plus 6,000 is 12,000. 12,180 plus 2,000 gives us 14,000. 14,000 plus 14,180 plus 140. That should give us something like 14,320. So let's write that 14,320 right there. So again, 14,320, 14,320. Now clearly we will have a balance carried down to balance both sides. Carried down of how much? Now if you deduct 9,880 and 500, you should come up with 3,940 for this particular question. Therefore, the balance brought down will be equals to 3,940. Now we have a lot of these type of questions. We even have a learner who has sent us a similar question, which we will be looking at and making a video of tomorrow. So for now, please consider subscribing to this channel, and I do promise that the handwriting will improve. But I'm sure in terms of the principles, you were able to understand. Now, don't stop pushing, keep pushing, And thank you for watching. Please like and share.